first thing that I would like to do is I just want to, start with a definition, a working definition, no pun intended, of working capital, because it's I think part of the misconception or misperception of working capital is not necessarily knowing how to define it or what people mean when they're talking about it. And I recall meetings with senior bankers where they were talking about, what do they mean by working capital here? What's included, what's not included, right? So for anybody who's had any accounting, any intro to finance, I'm talking, basic accounting, intro to finance, or perhaps even taken a course, maybe on campus or somewhere online, like not unlike this one, you probably came across a textbook definition of working capital. And a textbook definition of working capital is, and this is normally where I would ask the class for one, but we have kind of more of a lecture style here. So I'm going to be my own best student and do my answering. I certainly don't want to put Yolanda on the spot for this. So a working definition of working capital is current assets minus current liabilities. Current assets minus current liabilities. So, gosh, if you go to any balance sheet, you look from top to bottom, or if you're under IFRS, you might look from bottom to top, and you would see these classifications of current and non-current. So, since we're talking about the balance sheet together, really for the first time, let's take a step back and define what we mean by current, or non-current. So, current in accounting terms means that we expect this particular account to convert to cash within 1 year. That's the sort of technical definition. Convert to cash within 1 year. So if we think about what is, what is in the current section, and let me just quickly go over to my workout here, blow this up a tiny bit. If we go into an example of a balance sheet, which we have here in the workout, we can see that this is a GAAP financial statement. So we have the current assets and liabilities on top.